Hello everyone, welcome to the Ichimoku.co and Forex Trading TV daily FX market review for the trading day ending Wednesday, November 12th. Firstly to the Euro US dollar, and here we see a black body candle is formed following the market testing above the 124.55 level of previous support and resistance. The market breached that area in a bullish manner. Fairly strong candle to the upside, the buyers closing with control, finding some solid upside momentum. But for that candle, the market found resistance at the Tenkan-sen indicator and has done so today as well, testing just above the Tenkan-sen and being strongly rejected from there, breaching the 124.55 level in a moderately bearish manner. We have a small black body that's formed, so we've had a switch in net momentum from the upside to the downside and suggesting potential for the market to trade to lower levels. If the buyers are strong enough and they can breach the Tenkan-sen and close up above there in a bullish manner, it would suggest higher levels. But the Tenkan-sen is going to be the key here. The market has found resistance at the Tenkan-sen on multiple occasions in the last few trading weeks, and it does suggest that if we do see the market breach there, we could see the market test at least to the 125.84 region, or at least to the Kijun-sen trading at 126.21. Now we do have a bearish market in the medium and longer term time frames by trading below the Kijun-sen and the Tenkan-sen. So it does suggest that the next move is likely to be to the downside. So watching the low of this candle very closely, that low is at 124.17, and if the market can breach there in a bearish manner, we could see Euro US dollar trading down to the 123.32 level of previous support. In terms of our bands, and here today we've seen the lower band once again act as resistance, and this really does suggest that there still is a fairly strong negative bias in this market, and there's a good opportunity here for the sellers, if they're strong enough, to take out the low of that current candle and trade the market to lower levels. For the past third consecutive trading day, the market has tested within the lower band and has been rejected from there, and that's the sixth of the past 7 consecutive trading days that we've seen price rejection from the lower band, so suggesting that the buyers certainly aren't strong enough to break into that area and change this strong bias in that medium term time frame. Moving next to the US dollar Japanese yen, and following that strong bullish candle from the previous days, trading in a strong white body candle that took out close by resistance at 115.34, we've seen a black body candle develop today. So it suggests that we've had a change of momentum from the upside to the downside in net terms between the open and the close. Not a great amount, but it could be significant to this market and suggest potential for a change of trend back to the downside. The only problem here is that the sellers have failed to take control. We've seen the market close between the midpoint level and the high, slightly closer to the midpoint level, suggesting that the buyers have maintained control, albeit very weak control. But the important thing here is that we haven't seen strength from the sellers, and other than that renewed momentum in net terms. But the important thing here is the large shadow on the bottom, and it highlights the sellers losing commitment down below that 115.34 level of support, and it does suggest that if the buyers are strong enough and if they can breach 115.76, we could see the market trading to higher levels. Now we do have a bullish market in all 3 time frames supported by the Chica span, and I suggest with the strong upside momentum that we've seen, if we do see the market come off, we're likely to find very solid support at the Tenkan-sen indicator trading at 114.25 at the moment. We're not seeing any strength from the sellers here either, so it really does say something about the strength of the buyers overall. And the weak retracement here that we saw a few candles ago, with just one black body candle, then the buyers coming back into the market strongly, really does say something about the lack of strength of the sellers, and suggesting that there's a very good possibility of the buyers remaining in control in the US dollar Japanese yen. In terms of our bands, and we see this continued price activity up above the upper band, and it suggests still that we have a very strong bullish bias in the medium term time frame. We haven't tested anywhere near that upper band yet, and it's likely to act as very solid support if we do see some selling come in, and at the moment as this market trades, the upper band is trading at 114.71. Next to the US dollar Swiss franc, and here we see price rejection from the 96.74 level, as we saw with the previous day's trading, just testing above there previously. Sellers taking control for the previous day, but today a change of control back to the buyers. So even though we've had a change of trend confirmed with today's candle, lower high, lower low, the buyers have closed with control, and that doesn't give us a lot of confidence in the market trading to lower levels. We also see formation of a white body candle, suggesting that momentum has switched from the sellers back to the buyers in a minor way. Now, at the moment, as this current candle is trading, we are seeing resistance once again at the 96.74 level, so that will be an important level. But also, for the second consecutive trading day, we've seen the market test down below the Tenkan-sen indicator and be rejected from there, failing to close down below there, and we've seen that today. So that will be an important level, and at the moment, the Tenkan-sen is trading at 96.59. But we do have a bullish market in all three time frames, supported now by the Chikou span trading above the corresponding price action. So that's suggesting that if the buyers are strong enough to breach the 96.74 level in a strongly bullish manner, we could see the market trading to 97.51. Now, one thing to watch for here is the flatness of the Kijun-sen indicator, and very often when we have a flat Kijun-sen, price action tends to be attracted back towards it, and that's what we've seen. The sellers attempting to attract back towards that flat Kijun-sen, but being unable to breach the Tenkan-sen suggests that the buyers are still fairly strong in this market. If we do see the sellers breach the Tenkan-sen and close down below there, we could then see the market testing to those lower levels, initially 95.67, and then perhaps to the Kijun-sen trading at 95.49. In terms of the bands here, and here we've seen the market test outside of the upper band today and closing just above there, not in a strongly bullish manner, moderately bullish, and it does suggest there is an opportunity here for the buyers to come back into the market. The area within the bands for the third consecutive trading day holding as some sort of support. At the moment we're trading around that upper band. 96.64 is where it trades. We'll be looking to that upper band to hold as potential support for this market. It will be some important trading activity coming up for the next day. If we see the market close within the bands in a bearish manner, we could then eventually see the market trade back to the middle of the bands, 95.80. But at the moment, we don't have any hint that that's happening yet. Moving next to the Aussie dollar, US dollar, and here we've seen a continuation of the trend to the upside. The previous day's trading, we saw an outside day, but an uptrend was established prior to that. Very large white body candle, buyers in control, finding some solid upside momentum, finding resistance around the Tenkan-sen indicator, but importantly today we've taken out the Tenkan-sen and closed above there on a moderately bullish candle, but a spinning type candle. Now, the reduction in the size of the body does cause some concern. It suggests that even though we still do have some upside momentum in net terms, that amount of momentum is not as great as the previous day's trading, so it does suggest potential for a change of trend. But also the indecision with the market testing to the Kijun-sen indicator and being rejected from there suggests potential for a change of trend. But then the price action being rejected from below the Tenkan-sen suggests that the Tenkan-sen may hold as strong support, whereas it was previous resistance, now it's holding as support, and that suggests that if the buyers are strong enough to breach the Kijun-sen indicator trading at 87.25 and close up above there, there is an opportunity for the Aussie dollar to rally to higher levels. Now, that will be contingent upon the market breaching 87.69 level of previous support and resistance. That 87.69 level has been an important level in the past, and we can see all this trading activity around there with the market hovering above and below there and then holding as support previously, and then a couple of weeks ago finding resistance roughly around that area. So some important trading activity coming up if the market can breach the Kijun-sen to the upside, but at the moment we are finding some resistance there. Now, just looking at the Aussie dollar, US dollar with the bands, and here we've seen the market rally to the middle band, so mean reverting at the moment. So that strong bearish activity that we saw previously is no longer in this market. The key here was the bullish close within the bands for the previous day's trading, and the market being attracted back to that towards that middle band. Now, the middle band is held as resistance, and then the area around the lower band is held as support. So quite some indecision in this market. So some important trading activity activity coming up. Watching the middle band closely. 87.32 is where it trades at the moment. The question is, will it act as resistance once again? And there's an opportunity for the lower band at 86.52 to act as support. If the buyers are strong enough to breach the middle band in a bullish manner, we could see the market testing eventually up to the upper band at 88.12.